Well, good afternoon, child care providers. We hope that you're all doing well. My name is Benjamin Geese with Kentucky Youth Advocate. We are Kentucky's independent voice for children and families, and we are joined today by an esteemed group of colleagues who will be providing information for the Small Business Administration's or SBA's loan options outlined in the Federal CARES Act. To get us started, I'll first start with our introductions. I've already introduced myself. And so now we will move on to say that we have been joined by Don Thompson of Community Coordinated Childcare, or 4C, Mike Hammonds of Learning Grove Incorporated, CPA Amir Hodzik, shareholder at Von Lehman CPA and advisory firm, and early childhood consultant Terry Tolan. Before we continue, I want to mention a few things. One, please note that this conference is being recorded. Please also note that all of our participants, with the exception of our panelists, are currently on mute. Should at any time you have a question, please feel free to utilize the chat box at the bottom of your screen. You can type a question into the chat box by hovering your mouse over the bottom of your screen and clicking on the icon that looks like a thought or dialogue bubble, and then typing your information into the chat box. You should also know that at points throughout this webinar, I will also be utilizing the chat box, and that is to include links to other resources that our panelists will be discussing. We should also tell you that we are here to serve as a resource as you begin to navigate this process. We are not here to advise you on what is best for your business. Remember that any decisions that you make should be in consort with your bank or other financial advisor. We also want to note that the loan options outlined by the Federal CARES Act are new federal options. This means quite simply that we're all in this together and we're all trying to figure this out together. So we advise you to continue to be mindful of changes that could drop from the federal government, as many changes have dropped over the last several days, impacting potential loan applications. You should also know, and please pay especially close attention to this, that all of the loan options are provided at a first come, first served basis. So while you need to do your due diligence in checking with your bank or financial advisor, not just with us, you should know that you should act quickly. We've heard that some funds are already starting to run out. So please take advantage of this while there is still time. We also want to let you know that the forgivable loans are only intended to cover roughly 2 months of operating expenses. So please remember that this is just a short-term fix. The hope is that COVID-19 will have receded and your center will be back open in 2 months' time. But remember, just like you, we can't predict the future. So now, without much further ado, I will turn things over to Mike Hammonds of Learning Grove for a brief introduction to the Small Business Administration loan options.
Thank you, Ben. Thank you. I appreciate it, Ben. And good afternoon, everyone. I'm Vice President of Advocacy at Learning Grove in Northern Kentucky. And as you know by now, on March 27th, President Trump signed the Coronavirus Act Relief and Economic Secure Act. I don't know the exact title usually because we all refer to it as CARES. This act provides $2.2 trillion in COVID-19 relief with $367 billion going to businesses, small businesses. A small business is a for-profit or a nonprofit business that employs less than 500 workers. If you're a child care small business owner impacted by COVID-19 and employ less than 500 people, you are eligible to apply for a small business loan. Here's some of the options that you can consider. The first is the Payroll Protection Program loan, often referred to as a PPP loan. In a nutshell, a PPP loan is designed to permit workers to stay home during the COVID-19 outbreak, but stay on their company's payroll. Companies that keep their workers or during the pandemic can receive up to 18 weeks of loan assistance. PPP loans can also be used for expenses like utilities, rent, and mortgage payments for the company. If the company does hold on to their workers and they keep their wages status quo, the loan can be forgiven by the federal government. Child care programs can take full advantage of the loan forgiveness available by spending funds on qualifying forgivable expenses, including payroll, mortgage, interest payments, rent, and utilities. The SBA does require that at least 75% of the forgiven amount be used for payroll. Maintaining or quickly rehiring employees and maintaining wages is critical for the have your loan forgiven. The amount forgiven will be reduced if employees laid off or their wages are reduced by more than 25%. Also, you need to be sure to have the documents that you need to prove that you qualify for the loans. Programs will have to show appropriate documentation to verify that they maintain their staff and wages, and to verify the payments on mortgage, rent, and utilities. The other option that we're going to discuss today is the economic injury disaster loan. It's a cash advance known as EIDL. In a nutshell, an EIDL cash advance small business can request an advance of up to $10,000 to help maintain payroll and make rent and mortgage payments during the temporary closures or losses caused by the pandemic. Funds will be dispersed within 3 days of a successful application and will not have to be repaid. Small businesses with less than 500 employees are eligible, including sole proprietorships with or without employees, independent contractors, and self-employed persons, as well as for-profit businesses and nonprofits. But before we continue, I want to make note of the following. If programs received an EIDL cash advance and a PPP loan, the amount forgiven will be reduced by the value of the cash advance. Please note too that any remaining portion of the PP loan not immediately forgiven is automatically turned into a 2-year loan with an interest rate of 1%. Loan payments will be deferred for 6 months, but interest on the loan will go ahead and accumulate. The Center for Nonprofit Excellence has created a side-by-side comparison for both the loan types for nonprofits. I think that's on your, Ben just put that up on chat. So I'll turn it over to Terry Tolan to explain the EIDL application process.
Thanks, Mike. I'm Terry Tolan, a longtime advocate and early childhood consultant, and Dawn Thompson of Community Coordinated Childcare and I will walk you through the basics of how to apply for the EIDL, or the Economic Injury Disaster Loan. Each of us have completed a practice application for this option, and we'll share with you what we learned while applying and what you'll need for a smooth and successful application process. To begin, you can only access the EIDL application online on the SBA website, and the link will be coming to you now in a chat box. Here's our most helpful tip. The online application has to be completed in one sitting. You can't save it and start again later. We suggest that you budget at least 2 hours to gather your information and complete the online application. You'll need the following information prior to the beginning of the application process, because if you dawdle in the middle of it, it'll time out and you'll have to start all over again. So first helpful tip is be sure you use the phone number that you can currently access while your business is closed, and an email address that you can access, and then be sure to monitor it, because if there are questions after your application is submitted, the SBA will contact you via that email address. You'll also need your taxpayer ID number associated with your business, and that would be either your employer ID number or EIN, or your social security number if you're a sole proprietor. It'll ask you your organization type. You'll need to know how your business is organized and when your business was established. For example, are you a sole proprietor, a partnership, a limited liability corporation, an S Corp, a C Corp? And if you're a partner, you'll have to have the contact information for all of the partners in the corporation. If you're a partnership, you'll need to have that for everybody. If your business is part of a larger company, the application should be submitted by the parent company, not by you. Nonprofits will need the date of your 501c3 approval letter, and for-profit businesses will need the date that your articles of incorporation were delivered to the Secretary of State. Here are some questions we encountered along the way and how we address them in our application. You'll need to understand a few budget items and be able to report this information in the application. Gross revenue. Gross revenue, of course, is all the income for the period, and the period is specific. It's February 2019 through January 2020. And I know that's not going to correspond to anybody's fiscal year, so you'll have to pull the information in a way that's different from what you usually do. Cost of goods sold is the cost, all costs directly involved in delivering your service. So you'll need the cost of goods sold for the same period of time, February of last year through January of this year. If you're a nonprofit, the application will ask you for your nonprofit cost of operation. This is the total expenses on your statement of activities. Nonprofit folks might think this means operating expenses because we often talk about it that way, but in this case, the SBA wants your total expenses. Combined annual operating expenses for all secular social services provided by faith-based entities. Faith-based entities can only count expenses related to providing services that are not purely religious in nature. So there are different instructions for faith-based, and we'll send you a link now in the chat box to the SBA site where there's frequently asked questions for faith-based organizations, and encourage you to familiarize yourself with those before you submit your application. They'll also ask you if you've had compensation from other sources received as a result of the disaster. Chances are good that this is probably the first action that you're taking, so you probably won't have anything else yet, but if you have, you'll need to disclose any compensation you received from other disaster funding sources. And you'll need the name of your bank and your account number and your routing number, because funds will be deposited directly into your bank account. Also, before you submit, be sure to save a copy of the review page, because you won't get a copy, but you will get a confirmation number. Make a record of that number before you click the submit button. They don't send you a confirmation email. But if they do have any questions about your application, they will email you. Dawn, what else did we learn?
Thanks, Terry. If you have questions about the EIDL application or problems providing the required information, you can contact the Small Business Administration Customer Service Center. That information is coming to you in the chat box now. They have a 1-800 number as well as an email address that you can contact them at. Also in the chat box, we're going to share some links for child care provider budget templates that you can use in your business. This will also help you identify those sources of income and expenses that you're going to need for this loan application. You can find these forms as well as other financial management tools for child care providers on the Kentucky Shared Services website. We're going to share that website with you in the chat box as well, so you can look at those and other forms as you see fit. But if you think this EIDL is an option for your business, we encourage you to speak with your accountant, your CPA, or your banking institution to find out more information. Now we will turn the call over to Mike Hammonds and Amir Hosdick for more information about the Payroll Protection Program.
Hi, this is Mike again at Learning Grove, and I'm joined by Amir Hosdick from Von Lehman and Company. He is Learning Grove CPA and accounting with our accounting firm. And today we will be walking through how to apply for the Payroll Protection Program loan. We applied for the loan at Learning Grove, so today we can share what we've learned while applying for the loan, and what you will need to learn to know for smooth and successful application process. To begin with, you'll need to access the PPP application. The application is a fileable PDF document. The application can be downloaded from the Small Business Administration's website, and that again is going to be posted on the chat room. That you must fill out the application and submit it to an eligible SBA lender. You can find an eligible SBA lender on the SBA website, and again, that link is going to be listed on the chat room. You might want to check with your bank to see if your bank is an SBA lender, and maybe work with them if you can. So now I'm going to turn it over to Amir for offer some more details and then take some of the questions that we've received.
Sure. Thank you. And yes, it's important to know that this loan, this PPP loan, is to be applied to directly with your bank, with your financial institution, not with the SBA. So the application that we provided a link for in the chat box is actually going to have to be filled out. It's just that a lot of banks are rolling out different ways to apply for this program, and predominantly they're asking applicants now to do it online. So you end up filling out this application, but in the way that they want to digest it. So I think it's still a good idea to download the application and be familiar with everything that's going to be required of you as you apply for this program. But just know that different banks are going to want to ask you different things. So in order to help you prepare for that, I've put together some commonly asked for items with all banks that we've been dealing with on this program. And again, we're a regional CPA firm headquartered in Fort Wright, Kentucky. So we have exposure to most banks found in this area, the big ones and small ones. So if you are with a bigger bank, it's very likely that you'll complete this process through an online portal that they've created. And if you've been reading about this program, it's been rolled out as quite a mess, to be quite honest with you. A lot of banks have just struggled with the volume that they have been asked to process. And some of them, even very large financial institutions, are still not up and running and lending under this program. So just a high-level overview of the program that we're discussing here. This is about $350 billion of allocated funding in the CARES Act that's been allocated to the SBA, the Small Business Administration, who typically will help with lending decisions with banks by guaranteeing a portion of a loan so that the bank is more comfortable in making that loan to a recipient. What they've done, though, is expanded the rules to cover up to 100% guarantee from the SBA and virtually no personal guarantees of any kind or collateral to be required to receive these funds. So it's making it very easy for banks to go ahead and process these loans as long as you certify that your business has been impacted or there's uncertainty, which certainly all of you would be able to attest to. So the SBA is just there to provide this guarantee, but the lending is still being done through banks. So again, just to reiterate, this program, you'll have to contact your bank to apply for it. And we're finding that the easiest way to do this is with your current bank as opposed to trying to set up an account with somebody else. If your current bank is not offering this loan program because they're not an SBA lender, then it would be wise to find another banking institution that can go ahead and process the loan. I believe there is a link on the SBA website that we've shared in the chat box that can help you find that lender. So some of the confusion that involved with this program was really determining what is your loan amount. So how can you figure out what you're eligible for? And it is 2.5 times average monthly payroll cost. So that sounds simple enough, but it can get very convoluted when dealing with payroll costs. So the guidance, the most current guidance, and one that Treasury has confirmed, is that you should be using gross wages to calculate that payroll cost. So most businesses will need to access their payroll records to figure out what average monthly payroll costs are and focus on 2019 calendar year. Some banks may ask for that information all the way through first quarter of 2020. So I've advised most of my clients and helped calculate this amount both ways, both for the calendar year 2019 as well as the 12 months preceding March 2020. So in other words, April 2019 through March 2020, as well as calendar year 2019. You would be taking gross wages and adding to that amount any health insurance benefits that you're paying for, as well as any retirement benefits. So think of that as IRA contributions or 401k match dollars if you have any of those types of costs. When you determine that total amount for the year, you divide that by 12, and that's your average monthly payroll cost. Multiplying that average monthly payroll cost by 2.5 gets you your loan, your potential loan amount. Then I think we're going to provide that spreadsheet that I sent to you earlier, but there is a loan calculator that we'll make available to everybody to help you determine what the maximum amount of the loan is. Some of the records that you'll need to have ready with your application are going to be those exact payroll reports that you use to determine what the monthly average payroll is, but also have ready your Form 941s, which are tax withholding tax returns for employment withholdings, and those are filed quarterly. So you should have all 4 quarters of 2019 as well as first quarter of 2020 if it's available. Form 941s as well as state unemployment tax returns. Those are also done quarterly and should be with, if you use a payroll service, they should have this readily accessible for you. If you do your own payroll, then you should get those records as well. The other part of payroll cost, as I mentioned earlier, are health insurance premiums. So if you are paying health insurance for your employees, you'll need those invoices as well by month. So with your 401k or retirement benefits, to the extent that you're paying any of those and they're not running through payroll, then again, you'll need some kind of verification that those payments are accurate if you're using them in your definition of payroll cost. So we've gotten a lot of questions, and I don't want to jump too far ahead on self-employed individuals. So essentially, if you have no employees, but you're running a business of providing services, you are eligible still to get this loan. It's just that the definition of payroll cost is going to be different than what I mentioned earlier, gross wages, because you don't have gross wages. Self-employed individuals will be able to include all of their self-employed income. So again, if that is that's best determined by looking at your tax return. So if you file a tax return and you're self-employed and you file a Schedule C, that's really what the number is going to be, is your Schedule C earnings. If you are self-employed but have not filed tax returns in that manner, then it's really not clear at this point how and if you will be able to apply for the loan. We're expecting more guidance to be released for self-employed individuals. The Treasury has said that April 10th will be the first date that self-employed individuals can apply for this loan. So I anticipate that between today and that date, there's going to be a lot more information that comes out dealing with self-employed. But just know that yes, you are eligible to apply for it. It's just the determination of payroll cost and how you calculate it that could change between now and April 10th. But for the time being, what I'm suggesting is that you basically use your Schedule C earnings from 2019. And if you haven't filed 2019, then go back to 2018 and look to see what that number was.
Okay. Well, thank you, Mike and Amir. We're going to move on now to some questions that we received via the online Google Sheet RSVP form. Amir, I will read the questions to you as if I am the person that asked them, and then you are free to provide all of the information that you're able to give. So the first question says this: our employees have been laid off for 3 weeks now, so they have already filed for unemployment. If we get approved for the loans, PPP, etc., are employees required to accept payroll from us, or do they have the option to stay on unemployment?
Good question, and I believe that this may vary by state, but if you are to inform your employees that you want to rehire them, then they are no longer eligible for the employment benefits. And that includes this additional $600 per week that everybody who is on unemployment is receiving as a part of the CARES Act. So there is going to be some challenges in navigating this, especially if you're shut down. So at what point, do you tell your employees to come back on payroll relative to your ability to actually operate, which is currently restricted? So, to answer that question, you will need to get people back on payroll in order to have this loan forgiven. Payment of unemployment benefits by the government does not qualify, essentially.
Okay, very good. Moving on now to the next question. Will we be able to utilize funds when our centers reopen to hire full staff back, regardless of the number of children that return? Will the 8 weeks of payroll start when we open again?
That's another good question. And the 8 weeks is defined in the bill as from the date that the loan is originated. So that's still subject to a lot of interpretation, but the way that I interpret it is once you have the funds, that's when the 8-week period begins. So as far as if you receive the funds, but you're still not able to operate, then that's where you'll really have to work closely with your bank to either delay when you receive those funds or make sure that they don't start the 8-week period because you're not actually spending the money yet. So generally speaking, that's how I would look at it, is if you can't spend the money and you don't start spending it on payroll costs, then the 8-week period does not start. So more guidance needed on that still, unfortunately.
Okay. Our third question, if our daycare employees are drawing unemployment, are we still able to apply for a loan to cover other expenses?
Yes, you are able to apply for the loan, and remember that the loan is calculated based on prior payroll costs. So the amount of the loan that you would be able to receive is going to be based on payroll costs and expected to be used to fund payroll. So the current status of unemployed workers really doesn't play into this, other than when can they get back to work so that you can actually pay them and take advantage of this loan program.
Very good. To receive loan forgiveness under the PPP program, do the employees just need to be back on payroll, or do we need to pay them their back wages?
They just need to be back on the payroll. So any back wages that are owed to them that you pay to them during this 8-week period will factor into the forgiveness portion of this loan. So those costs will qualify to be payroll costs, but they do need to be back as employees and included in your employment counts.
Okay. Are small in-home child centers who are looking to expand eligible for the SBA loan?
Yes, they are, but just looking to expand, I just wanted to clarify that doesn't really matter in this case. Just know that there's very limited uses for this, for these loan funds, and that's, again, it's payroll cost, it's rent, it's utilities, and it's mortgage interest if you obtain a mortgage prior to January 15th of 2020. So any kind of use of these funds outside of those purposes, whether they're expansion or not, would not qualify. Now, of course, if you're adding more employees and expanding that way, then those costs would qualify to be forgiven under this loan program.
Are you eligible for a SBA loan if you are a licensed family home center with no staff except my spouse and myself?
I believe yes, but you would need to be reporting self-employment income as a result of that. So you would need to have some kind of record showing that you are a self-employed individual and operating a licensed family home center.
Very good. What stipulations are in place for the SBA loans to be forgivable for organizations receiving them?
Mhm. So, and I'll repeat this again because it is very important, but the funds just must be spent on payroll, rent, utilities, and mortgage interest. You have 8 weeks to spend the money. And again, we think that that's starting with the date that you're given the loan. And then you must maintain your average full-time equivalent counts. So there are 2 dates that you're measuring against, either the average employment count as of earlier this year between January and February of 2020, or looking back to 2019 for the first half of 2019. So whichever number is lower is the number that you would want to measure against. So for example, if you had 20 employees in February of 2020 and you had 15 employees during that period of time in 2019, the 15 employee count is what you would use. And you just have to make sure once receiving these load funds that you stay over that 15 employee mark, and that way you would have most, if not all, of your loan forgiven.
Very good. And we have just 5 more questions.
Mm-hmm.
How will loans work if not enough parents go back to work and so not enough children return in order to reopen the center?
Yeah, and my answer to that is that you would likely not be able to use these funds unless they extend the period of time. So currently it's through June 30th of 2020, and you have 2 months to spend. So if we're still here on May 15th and you have not been opened, then I don't think you will be able to use these funds and have them be forgiven, at least not 100%. So what I would advise is that you really pursue the EIDL program through the SBA that Terry and Dawn covered earlier, because you can use those funds even if you're not operating and there's no strings attached to them in terms of how you spend the money to be able to have it forgiven. There are some requirements of how you're supposed to be spending that emergency money as well, but it can help you immediately if you have bills that need to be paid and obviously you have no revenue coming in. So there's nothing that says that you cannot apply for both of these loans. Just know that if you are approved for the EIDL loan, it can be refinanced into this PPP loan. So the balance of your EIDL loan can be forgiven 100%, even beyond the $10,000 that they're giving everybody as a grant, if you apply, of course.
Very
So,
good.
yeah.
Can family daycares get this loan if they don't have employees? Will they forgive the loan?
Yes, again, it's similar to the question a couple questions ago, but as long as you are self-employed and have income as a result of that self-employment, you'll be able to apply for the loan.
If we already submitted and possibly did it wrong, are we allowed to reapply?
I think logistically speaking, that might not be possible. From what I've gone through over the last 5 days with different banks, again, it's been quite a difficult situation for the banks to handle this type of volume. So even accessing the application has been a challenge. To now try to re-access it and change your information, I think would be pretty difficult. If you think that you have significantly miscalculated the amount of the loan, then I would communicate that to the bank so that they can make adjustments before the amount is actually funded. So that would be my recommendation, is that you contact a person at the bank that hopefully has been helping with this. And if there isn't such a person, then I'm sure that they will contact you before, giving you the entire loan amount one way or another. So I believe there's going to be time to adjust any of these numbers. It's just not very easy to do currently through the application systems that have been put in place by these banks.
I'm an LLC and not on my own payroll. Which SBA loan can I apply for?
You can apply for both of them, both the EIDL and the PPP loan. So there's no restriction on self-employed LLC owners on either of these programs.
Okay, and now we're to our final two questions. Will I have to pay this loan back? Is this a loan or a grant? A good question to ask for clarification.
Yep. These are loans. These are definitely loans. They can function as grants if you spend the money and apply to have the loan be forgiven. And that's important detail that I might have left out earlier, but there is going to be a process where you have to apply to the same bank that gave you the loan to have them forgive the loan. So this calculation of tracking your spending and payroll over the 8-week period, as well as other expenses, will need to be documented very, very clearly. So you'll want to keep track of this money very carefully, I think, if you want to make sure that you're forgiven the entire amount. So just know that it is still a loan, and if you're not forgiven a portion of it, either because you did not spend it over that 8-week period or some other reason, it does turn into a note that's due in 2 years. The first 6 months of that note are payments are deferred, and as we pointed out earlier, interest still accrues on the loan balance, but it becomes due in 2 years and it charges interest at 1%.
Very good. And for our final question, are EIDL loans still available? Can loans taken out after April 3rd still be refinanced or added to the PPP loan?
Yes, they are still available. And yes, I do think that you will be able to refinance your EIDL loan into a PPP loan. However, again, logistically speaking, that might be a challenge because you've already submitted an application. You don't know if you've received approval for that application yet. So it's going to be difficult to tell the bank that you've applied for another loan, but you don't know that you've been given the funding. Again, I would just advise that you stay close to whoever's been helping you with this on the banking end. And if you find out that you've been approved and given the actual money from the EIDL advance, then you would just need to disclose that to the lender so they can adjust the amount of the PPP loan that you're receiving by the amount that you've also received from the EIDL program.
Okay, very good. Well, that concludes our call this afternoon. We certainly want to thank all of the child care providers and advocates who have joined the call this afternoon. We also want to let you know that since this call has been recorded, we will be sending this to the email that you provided on your RSVP form. So if you find that you need additional information or need clarification, can't quite remember this point or that point, feel free to go back on and access that. This will also be available on Kentucky Youth Advocate's COVID-19 and Kentucky Kids webpage. You can access that webpage and other additional COVID-19 resources at kyouth.org/COVID-19. Are there any other questions that any remaining participants had that they would like to add to the chat box prior to us closing out? Okay, seeing none, again, thank you all so much. And if we can ever be a greater service to you, please feel free to reach out. And please also give a warm thank you to Mike Hammonds of Learning Grove, Jesse Whittish of Kentucky Youth Advocates on Technology Today, Terry Tolan, an early childhood consultant, Don Thompson of Community Coordinated Childcare, and Namir Hodzik of Von Lehman CPAs. Thank you all so much and have a great day.
Thank you, Ben.